What is going on, everyone, and welcome back to Explain the Charts. Today we are looking at Bitcoin, which has been experiencing a massive sell-off, grabbing headlines across all financial news. We're seeing reports of a crypto market crash, with prices dropping below key levels like $92,000 and even briefly plunging below the critical $90,000 mark. The news paints a grim picture, with headlines talking about a structural bear market, extreme fear, and over $1 trillion being wiped from the total crypto market cap in just 6 weeks. Some of this fear is being attributed to large, old wallets like those associated with Mt. Gox moving significant amounts of Bitcoin, spooking investors. We also see commentary linking this crypto downturn to a broader sell-off in tech stocks, suggesting a risk-off sentiment is taking over the markets. However, it's not all doom and gloom. We've also seen reports of a sharp rebound after the price fell below $90,000, indicating some buyers are stepping in. So, let's turn to the charts to cut through the noise and see what the price action is really telling us. Here on the daily chart, we can see the bigger picture of how we got here. After a strong uptrend for much of the last year, Bitcoin peaked here in early October, right around the $125,750 mark. Since that top, it has been a clear and aggressive downtrend, marked by a series of decisive lower highs and lower lows. We can see major support levels at $120,000 and the psychological $100,000 level being broken with significant force over the past month. This brings us to the last few days, which have seen a dramatic acceleration of this downward momentum. Notice the candle from November 14th, a huge red candle that saw a drop of over 5%, breaking the market structure that was trying to form around $99,000. That was followed by another sharp drop on November 17th, pushing the price down from $94,000 to a low of nearly $91,700. This move to a 7-month low, as reported in the news, has wiped out all the year-to-date gains for 2025. Now, let's zoom in on yesterday's candle for November 18th, because this is the most important one on the chart right now. The price opened around $92,000 and experienced a massive sell-off, plunging all the way down to a low of $89,183. But what happened next is critical. Buyers stepped in with incredible force, pushing the price all the way back up to close the day positive, near $93,000. This has formed a candle with a very long lower wick, known as a hammer or a dragonfly doji. This pattern is a classic potential reversal signal, showing that despite the intense fear, there is significant demand for Bitcoin below the $90,000 level. This establishes the $89,000 to $90,000 zone as our new critical line in the sand support level. A daily close below this level would be extremely bearish and would likely signal another major leg down. To get a better idea of how this wild price swing unfolded, let's drill down into the 15-minute chart for the last few days. Here we can see the relentless selling pressure that began on November 14th. The price cascaded down, breaking through level after level with very weak bounces in between. This is the anatomy of a fear-driven market, where every small rally is sold into. Now, let's focus on the action from November 18th. We can see the price trying to hold support above $92,000 before a wave of selling hit around 3 o'clock Universal Time Coordinated, pushing us below $90,000. This culminated in the capitulation, wicked down to the lows near $89,300 on the 15-minute time frame. What followed was a powerful V-shaped recovery, a very bullish short-term pattern where the price reclaims the entire drop almost as quickly as it fell. Since that low, the price has been grinding its way back up, currently consolidating in the $92,000 to $93,000 range. This is now the immediate battleground for bulls and bears. So, what does this all mean for a potential trade? Let's outline the bullish and bearish cases from here. For the bullish case, the primary evidence is the massive rejection of prices below $90,000. This shows buyers are willing to defend that level, and a short-term bottom may be in. The bull's job now is to hold this recent low as support and begin making higher lows. Their first major hurdle will be to reclaim the $94,000 to $95,000 area, which was the support level just before this final leg down. A convincing break and hold above $95,000 would be a strong signal that the bulls are regaining control, with the next target being the psychological $100,000 mark. This scenario becomes more likely if we see continued buying volume and strength in the broader tech market. On the other hand, the bearish case remains very strong. The dominant trend on the daily chart is undeniably down. This recent bounce could simply be a relief rally or a short squeeze before the trend continues lower. Bears will be looking to short any sign of weakness, especially at the $95,000 resistance zone. A rejection there, followed by a break below the recent low of $89,183, would confirm the downtrend is resuming. If that key support fails, we must look at the chart for the next levels down. Looking back on the daily chart, the next logical area of support comes in around the $85,000 to $86,000 range, which was a consolidation zone back in March of this year. If that doesn't hold, the major target for bears would be the spring lows, down in the $78,000 to $80,000 area. To recap, the market is balanced on a knife's edge. The key price levels to watch are critical. Our make or break support is the recent low at approximately $89,200. Immediate resistance and a major test for the bulls lies at the $94,000 to $95,000 zone. Below support, bears will target $86,000 and then $80,000. Above resistance, bulls will set their sights on $100,000. Given the powerful downward macro trend clashing with the strong localized bounce, the situation is volatile. I would assign a 60% probability that we either consolidate here or retest the lows, as the dominant trend is hard to fight. A break of those lows seems more likely than a sustained reversal from here without more consolidation first. There is a 40% chance that the buyers who showed up at $89,000 are strong enough to absorb the overhead supply and push us through the $95,000 resistance. The key thing to watch will be volume. A high-volume move in either direction will likely signal the next major leg for Bitcoin. Stay vigilant and manage your risk accordingly. Before we wrap up, please remember that this is not financial advice. This video is for informational and educational purposes only. Always do your own research and make investment decisions based on your own individual circumstances and risk tolerance. Thanks for watching Explain the Charts, and we'll see you in the next one.